Okay, independent living students, welcome to the checking and savings accounts presentation lecture. In this presentation lecture, we'll be going over some of the fundamental basics when it comes to managing a savings and a checking account. Obviously, both of them have advantages and disadvantages, and they also have different purposes when it comes to us managing our funds. So let's go ahead and get started. Throughout the course of this presentation lecture, hopefully you will be able to gather at the end of it the benefits of having checking and savings accounts. And chances are some of you might already have these currently. How to open an account if you are looking to open one and you don't have one but you want to have one. How to use and manage your accounts wisely. Many different financial institutions offer a number of different money management tools which can be very, very beneficial when it comes to managing your funds and making sure that you have enough funds to cover your expenses. One of the things you definitely want to avoid is check cashers. You might see these advertised on television or on the radio where you can come and get cash advances and they'll cash checks before the money is in your account. There's a cost to this, and you want to be very, very careful about using these types of services. Obviously, your lowest risk is going to be to have your own account, which you have at either a commercial bank or a credit union. When it comes to having an account, a savings account and or checking account at any financial institution, whether or not that's a credit union or a commercial bank, typically you're going to see lower costs and fees. You're going to see these different accounts now being very safe and accessible 24/7 with technology and mobile apps. Sometimes you're going to, and I shouldn't say sometimes, but more often than not, you're going to get money management tools associated with your accounts as being a customer. The interest earnings that might come along with the different accounts that you could have, as well as references. So let's dig a little bit deeper into these different types of accounts and see how they work. All right, so when it comes to the different financial institutions that offer us savings and checking accounts, there is the commercial bank. Now, banks will offer checking and savings accounts, credit cards, loans, etc. Their deposits for each individual are insured up to $250,000, which is from the FDIC, open to the general public, and they are a for-profit business, which means banks are looking to make money. Even though you are having an account with them, they are looking to make money because they are profitly driven, whereas a little bit different from a credit union. Credit union are going to have a lot of the same types of offerings. They're going to have checking accounts, savings accounts, credit cards, loans, etc. They're going to also have deposits insured up to $250,000, but from a different organization known as the NCUSIF. Now, these you have to be a member. And in order to get the credit card or the credit union banking services, you are a member, say from Community First Credit Union or from Verve or Fox Communities. There's a number of different ones out there. They are nonprofit business. So their profits are going to go back in terms of lower interest rates to their membership. Okay, let's take a look at checking accounts. So checking accounts is going to be a money management tool, and some of you may already have these and are currently using them. When it comes to checking accounts, they get their name because in the past, individuals would write checks to be able to make purchases using the funds in the checking account. Yes, checks are still used, but they are not used like they have been in the past. We can access the money in our checking account a number of different ways. And actually probably one of the least common ways of utilizing our money from our checking account now is by writing checks. But if checks have to be written, in some cases they do, to pay for certain expenses, such as rent and possibly utility bills, this is what the check might look like, and it would be in a checkbook. We would write it out for the proper payment to the proper party and then send it as payment. Here's an example of writing a check might look like. Notice how it has the date on it, January 28th of 2014. It's paying to the order of Marta Leon for $950. Then underneath you will see this area right here, which is not only going to be reference to the amount of money that is being paid or is to be expensed, but it's written out in English. Here is the numeric value of the payment. This is the written out value of the payment. The reason why both of these need to be done completely is because they are going to be checks to make sure that this has been written out correctly. If what is written in the numeric value does not match what's written out in English, the check will not be cashed. And then down at the bottom we have the memo, which indicates what the check was written out for, and then the signature of the individual who is authorizing the payment. Okay, now once the check is written, then we keep track of our expenses and deposits in what's known as a check register. So this is basically a table grid as we see here, and we can take a look at how the balance of this particular account is going to change by either deducting from our balance if we have a payment or a withdrawal and adding to the balance if we have a deposit or a credit. So as you can see, after I advance to the next slide, here is how our checkbook register would help us keep track of our expenditures. So we had a beginning balance of $213.97. We had payments on 121, 125, 127, and 128. We had a deposit on 125, and then we just kept track of our expenditures and our deposits to come to an ending balance at the end of January, which is $8.73. Now, within any financial institution, whether or not it's a credit union or a bank, you will have the ability to have a debit card, which is a plastic card, just like a credit card. However, it's used very differently. It is used like a credit card. However, the funds that are used to pay for the expenses come directly from your checking account, which is different from a credit card. And we'll get to those in just a second. But we obviously, when it comes to credit cards, that's a different way of payment. It's actually a loan. It's a form of revolving credit. And we will be talking about that throughout the course of this unit as well. But the debit card, there's multiple ways to use them. There's benefits and there's rewards. And here's the drawback is that there's limited consumer protection when using a debit card. The nice thing about debit cards is if you can find yourself an ATM, which is an automated teller machine, then you might be able to find a way to access your funds without actually having to go to the bank. So some of you may already be using ATMs and using your ATM or debit card to withdraw funds from your checking account. Savings accounts, which are a little bit different. Savings accounts are insured deposits. There's interest that's paid per year. It's simple versus compound interest, which are two different types of interest. You want to find a savings account that's going to accumulate interest compounded, which means interest on top of interest, so you can see your balance increase faster over the course of time. Interest versus account fees. So what does it cost for me to have this account versus the interest that I am receiving on it? Does the math add up there? Is it beneficial for me to use this account? There's also individual development accounts or IDAs, and there's also automatic payday deposits or transfers. These are nice when it comes to savings account because there's a thing called direct deposit, which some employers, most employers offer nowadays. And on payday, you no longer collect a check and go cash the check. The money is automatically deposited into an account of your choice, usually a savings account, but could also be a checking account as well. When it comes to making deposits into your account, checking account or savings account, you have to fill out a deposit slip. So if you take a look at this as an example of a deposit slip for Jane Public, and she is going to deposit $100 in currency, 50 cents in coins, and she's got two checks, one for $54.13 and one for $87. Thus meaning that there is a total of $241.63 that she wants to deposit, but of this deposit, she wants to retain $25 cash going back to her. So the $25 will come back to her, making her net deposit now $216.63, which will actually go into the account. Endorsing a check is very important. Endorsing a check is what authorizes the check to be cashed. For deposit only, if somebody else were to get a hold of your check and you had for deposit only on it with the account number, it's going to automatically be deposited into that account. So that is a safety that the individual will not be able to cash the check and take the cash for his or herself. However, this also presents a security risk because now the individual who has the check has your account number. So the best thing to do is to make sure that you endorse it when you are at the financial institution at the time of deposit, so that there is little chance that that check is going to end up going into the wrong hands. Now, when you want to shop for an account, obviously, because you want to find the right one, determine the needs and priorities you have, conduct your research, and compare options. There's a number of different options out there. What is going to be best for you? That is the one that you want to pursue. Now, ways to get free checking. Checking accounts are mostly free from a lot of different banking institutions now. You can sign up for direct deposit. You can maintain a minimum balance. You can do all of your banking electronically. These are going to be all the ways to get free checking. Some of these, if not all of these, will apply when you are establishing your checking account. Now, when it comes to opening an account, you're going to need an ID or a tax number. You're going to have an initial deposit of a certain amount of money, whatever is required by the financial institution. You're going to have to determine whether or not this is an individual checking account or if it's a joint account. Are you going to be sharing it with a significant other or a spouse? You'll need to activate your debit card and change your PIN and order checks. So we want to make sure that we have the safety PIN on our card so that nobody else can grab it and go ahead and make withdrawals without knowing that PIN number, and then order checks for those specific type of expenses which will require check writing. You have to be careful when it comes to denied an account. Sometimes it's rejected. Now keep in mind, this is different from overdraft fees. So if your account is rejected, you will not be able to use it for any type of expenses or make deposits into it. Checks systems. Okay, this is an example of a resource that's available to consumers. It allows you to provide or get provided an account verification report. It is a free report that can be accessed every 12 months. Usually, this is a way of protecting us from fraud. Info stays for 5 years if not corrected or removed, and it allows you also to file a dispute in case you find something funny, maybe somebody trying to get access to your funds and possibly even stealing your identity. Now, online mobile banking, this is one of the beauties of banking nowadays, is you can usually access your accounts and your funds through any type of device, laptop or PC, or mobile device through an app. This allows you to take care of a range of different banking tasks. There are also requirements and limitations with them, and a lot of financial institutions will provide videos and tutorials to help you through that process. Here's an example of what an online banking screen might look like. It has account balances, it has transaction history, it also has different links as to where you can go to make deposits, to transfer funds, etc., etc. So once you get your first account, log into that online banking account portal and see exactly how to navigate through it so that you become familiar with it and can use it appropriately. Mobile banking, this is the app that you can install on your mobile device to access your funds with your login information and works similar to being able to online bank. There's a digital banking safety too that comes along with this. Obviously, take your financial information and the protection of it very, very seriously, and make sure that there is verifications in place before funds can be accessed. Now, balancing your checking account, you want to make sure that your balance is going to match what the bank has. So we take a look at our register, we compare it to our funds that we have in our checking account and the transaction history. We put check marks down here in this column here indicating that they've cleared the bank. Thus, we know that those transactions have cleared, and we can check to make sure that the balances match. Minimize account fees, choose accounts wisely, understand potential fees, make fee-free choices when you are banking. Overdraft coverage, this is if you withdraw money that's not in there, you want that for protection, obviously. Avoiding overdrafts, sign up for alerts so you get alerted when you might be close to coming to an overdraft. Check your balance frequently, confirm deposits have cleared, and then obviously maintain cushion in your account. Don't take your balance all the way down to a couple of cents. Resolving banking problems. Here are some resources that would be available to you so that you can document the process, report issues, or contact the CFPB. This concludes the presentation lecture on savings and checking accounts. Please make sure to review the material in this presentation lecture, as well as answer the embedded questions, and I will see you next time we meet in class.